The shine is coming off the EU IMF deal on Greece, at least in some market quarters. European stocks are up, but the euro is down and Greek financials are tanking. I'm Jamie McGeever and this is today's Market Pulse. So the EU and IMF agreed to cut Greece's debt by €40 billion via a package of measures aimed at putting the country's debt back on a sustainable path. Here with the FX markets reaction, I'm joined by Reuters FX analyst Neil Kimberley. Neil, the euro's reaction so far this morning, is it a classic case of, and I can't believe I'm going to say this, buy the rumour, sell the fact?
Well, Jamie, the price action in Asia suggests exactly that. There was a big barrier at 130, the figure, and the headlines about the deal was enough to take it out. That was great for the market. If you were long up there, you've been caught because a lot of Asian central banks were happy to sell above 130, and as Asia went home and left the orders into London, they were long. Now, the big winner this morning is obviously Angela Merkel because they pushed the deal past the September 2013 German election. But if you look at the details, it's not a perfect solution here. And that's what London and Europe have picked up on. And through the day, they've taken out the weak Asian stops on the downside in euro dollar. We're around 129.50 as you and I are coming on air. There are more stops below the 55-day moving average at 129.17. More stops again below 129, the figure, around 128.90-95. And then I'm not hearing any major bids until 128.50. Yes, we have a deal. Is it a solution? Probably not. Do you want to be long of euros near 130? I don't think so.
OK, let's talk about sterling. And obviously the big news yesterday was the appointment of Mark Carney to replace Mervyn King as the Governor of Bank of England. He's slightly more hawkish, let's say, than King. I think we can all agree on that. So is that a positive for sterling?
It was a knee-jerk. I mean, as you said, people weren't expecting Mr. Carney to get the job. Everybody was expecting it to be Mr. Tucker. So when it comes out, you're immediately going back, oh, what's the guy done? He seems a bit more hawkish, but that's Canada, not the UK. So you buy a few pounds. But he's not coming in till the middle of next year. We've got a long way to go. And at the end of the day, if it's as bad as it seems, you know, does it matter who's the captain of the Titanic if it's hitting the iceberg? It doesn't really matter. So I wouldn't be doing too much on Mr. Carney's appointment right now. I'm not going to buy sterling in November for a decision about when some guy's going to start in May or June. It's just not realistic for me. And anyway, on top of that, every time cable gets up towards 161, all I'm hearing from the Far East is, oh, give some there, Neil, I'll give some there. Plenty of offers between 160.70 and 161 a figure. And I'm not hearing of any major bids on cable until you get down to around 159.30. Would you want to be long above 160 at the moment for sterling? I don't think so.
So you're not buying into, I think it was analysts at Citibank this morning, the note was entitled Sterling con Carney.
I think it's a very creative title for a note, but no, I won't be buying that dish right now.
OK. So let's finish up with euro sterling. If you've got a deal on Greece, reasonably positive for the euro. Carney coming in, let's say, reasonably positive for sterling. What happens to euro sterling?
Well, at the moment, euro sterling is very range bound. It's clearly heavily offered around above 81.10. Every time we go up there, it's yours, down we come. You get down to 80.5, it's pretty well bid. Now, I know for a fact Eurozone exporters are staying out of this, but if we dip below 80, they're going to pick some up because of it's just the change of the big figure, so to speak. But at the moment, euro sterling is very rangy. And as regards Mr. Carney, well, by the time he becomes Governor of the Bank of England in the middle of 2013, I suspect we'll start be talking about, oh, Greece is running out of money again, and we'll start the whole charade. But that's a long way off. But for now, euros, sterling, couple of drunks leaning against each other, going nowhere fast.
That sounds like you and I in the pub at 4:30.
You're on.
OK. Neil, thank you very much. That was Reuters FX analyst Neil Kimberley. Under the macroscope at this hour, we look at UK GDP. Growth in the third quarter rose by 1%, unchanged from the first estimate. That figure was helped by the biggest quarterly rise in services output since the third quarter of 2007. Most economists agree, though, that the Olympic Games effect is unlikely to be sustained, and Q4 doesn't look particularly great. Our chart of the day today looks at Greek financials. They're falling sharply, down as much as 11% earlier, on fears that a Greek debt buyback plan could further erode their capital base. The buyback from private investors, will be at a deep discount of around 35 cents on the euro. Greek banks own around €15 billion of Greek bonds. On this day in history, the 27th of November in 1967, France's President de Gaulle said no for a second time to Britain's application to join the common market. Fast forward to today, 45 years later, and there are some in the UK saying no thank you to Europe. That's all from us for now. My thanks to Reuters FX analyst Neil Kimberley, I'm Jamie McGeever. This is Reuters.